Welcome everyone, my name is Mikael Munck. I'm the founder and CEO of 2021 AI. Welcome to today's event, the first in a series around the impact of AI in the financial sector. Today we will focus more on the governance, risk and compliance for AI. That's a term that in no way is a new term when we talk about financial institutions. However, when we look a bit on how this has been used when we talk about models, historically, I will say that it's been the high-risk models, typically within the capital adequacy, credit scoring, credit risk, and so on and so forth, where this has been applied. It's a new world out there, and it's new in the sense that more and more models are being used in financial institutions, across the institution, and in many different areas. It's also a new world in terms of having new regulations, legislations, not least to talk about the EU AI Act, which will come into force, at least be ratified sometime during next year. So it's time to rethink the approach to governing your models across a financial institution. And that's what we will talk about today. Just a few practicalities. We hope that you have a lot of questions for us. So if you look at the right-hand side of your screen, you can prompt the questions to us, and I'll take as many as I can in the Q&A session later. The ones we cannot answer, we will give you feedback to these on an individual basis. Let's look at the agenda for today. So Dr. Björn Preuß, the head of data science and responsible for running our data science team in 2021 AI, will give some perspective on what we see from the legislators, what we see from the academics, and what to expect from, let's say, the surrounding world for AI governance for financial institutions. Following that, we will have Rasmus Hauch, our CTO of 2021 AI. Rasmus will give you some perspective and some potential solutions on how to address these challenges in a more practical way. Looking into part of the solution here at a very high level, we certainly need to think about it in a way that managing, governing these more advanced technologies, we probably will need technology solutions to do that for us. With that said, I will leave the scene to Dr. Björn Preuß.
Good. So the first question I would like to address today is, why are we actually talking about GRC and AI for AI? And the motivation for this lies actually in the number of models that we see increasing over time. Generally speaking, for all kind of industries, we'll see models growing and growing. This is based on the Gartner study, what you see here. Financial institutions, obviously, this is even more the case, because they will also see into a couple of historic numbers of models. Could be capital adequacy requirement models, they could be risk models, you name it. But what we see now with AI emerging more and more also in the financial sector, we can see that newer models like fraud detection models, like know your customer, KYC related models, like churn or lead generation models also appear at the scene, and this requires a whole new setup of how to handle these models. One motivation of why we'll now need to look into GRC is that over the last years, we have seen institutions using this kind of models, a couple of scandals. One that I would like to mention here is the case of the Apple Card that Goldman Sachs was building for them or offering for Apple. And it's an interesting case because when this became public, that the Apple credit card, for all that haven't read the case, or I've skipped through that at one point, it was the fact that the Apple Card had some bias towards gender. So a male people owning the card would get a much longer credit line than females, which was obviously not really acceptable, and the society really questions that a lot. Now, Apple then tried to sue Goldman for actually building the algorithm that made this mistake. But the interesting fact now is that the court decided against Apple. So even though they haven't built the algorithm themselves, they're still required to keep track of what happens and that there is no bias. So putting that into a more general context, it means that it's very important to keep track of all the kind of models you use in your organization, and that could be both in-house built models, but also models you purchase from the outside. So motivated by all these concerns that the society raises around the application of AI for critical things such as credit, the regulators, research, but also other institutions started to work on guidelines, on regulations, to give guides on how to handle these. And I have listed here a couple that we have been also a bit associated with. So because it is quite important to start the dialogue with these organizations and see what is actually moving. We'll hear the EU, the Danish National Bank, and a couple of research institutions as well. So with that being said, the question is then, well, what makes GRC for AI so complex? What makes it different? I mean, we'll see in other areas in financial institutions already a couple of regulations. If we'll take classical credit, we have certain guidelines and audits in place. So why do we need to look at this now again? Well, if we look on AI models, usually when we read through the legislation and guidelines, there's first of all the data one needs to begin with. And here the interesting point is that data is not just some tables, credit system, but instead it's a lot of different data. It's textual data, it's social media data, it can be credit, classical credit data, or ERP data. Based on this data, and the data might change over time, one trains models, and these models are also quite different to what we're used to in financial institutions. These are not necessarily linear models that are directly explainable, but there could be nonlinear models, there could be neural networks that are not necessarily easy to explain, or the decisions are not easy to explain, so one needs to be aware of that. And that not being enough, around that we have a system that allows the organization to actually retrain and recalibrate these models ongoing. So we had a classical model being retrained once a couple of years and then audited for a year or half a year. Now we'll see a situation where the model is retrained maybe weekly, maybe even daily. And that means that the model changes, and one needs to keep track of that. In addition to that, we'll see machine learning and AI applications emerging around the whole institution. So it's not just credit, it's also customer interactions, product offerings, advisory. So we'll see these kind of systems everywhere, and potentially not only in one centrally managed approach, but very diverse applications. So one also needs to establish a framework to keep track of all of this. So if we go through and just highlight a couple of points of what someone needs to be aware of, one could say, well, looking at data, there are obviously points like that the data is clean, that there is no bias in the data, that we have some sort of description of the source and documentation of the data, where it comes from, and so forth. On the model, we could also raise the question regarding bias, regarding model fit or model performance, as a data scientist would call it. Is the model robust? And how often is the model actually retrained? And are we capturing all this information regularly once the model is retrained? We're just doing that at the end of our development cycle. And the last point is the system, and that is then concerned obviously regarding the access of different models, segregation of duties as a keyword here. So do we keep track of the tools that are being used? Are they kind of controlled within the organization? So not everyone builds the system based on different tools and different dependencies. If you want to know more about this, here are two working papers that I recently published. So have a look if you're interested more in this topic, or elsewise just get in touch with me or someone else from the team. So the question now is, what regulations do we expect? So what do we need to prepare for what is coming up in the next couple of years? Here are a couple of institutions that we have been in touch with recently. This is not a full list. I mean, one can extend that obviously quite a bit, but the EU being in Europe, obviously a quite key driver in terms of AI governance and regulation. Looking into Asia, the MAS in Singapore is quite on the forefront there. We have standardization boards looking into it, but we also have national institutions, being the ICO in the UK, or being the Danish Financial Supervisor Authority that looks into guidelines. We have national banks, as you saw, that look into publishing guidelines. So there's a variety of these, and these guidelines, they all share kind of similar ideas, but they're always tweaking these a little different depending on the industry focus or national focus. So what do we need to now do in order to actually control for all of these guidelines? Well, one needs to establish a system that allows to connect all different kind of stakeholders, to establish a system that is to a large extent at least automated, so that if someone retrains models again and again, and we're maybe not just talking about 2 models, but 100 models, one needs to be able to fulfill the requirements automatically. So the starting point of all these, going back to the regulations, is of course the legal text. It is not just the legal requirements, it's probably also some internal code of conduct or ethical principles that we see in a couple of organizations emerging. And all of this is usually in written text, and that is of course not really appealing to the technical people, and it's not really easy to work with it on an ongoing basis and automate this. So what we propose is to translate this information into different kind of building blocks, and that being digitalized assessments. So one can easily go through a couple of statements and tick the boxes, and these digital assessments are stored immutable. We're also proposing to apply risk indicators based on technical logins. That could be model performance metrics, that could be bias metrics, and so forth. And most important for this is that all of this information is encaptured in a digital trace, which means that in an auditing scenario, one can go back in time and look through all of this information, use it as documentation, and use it as kind of evidence on whether what someone reports is actually the truth or not. Next coming up, my colleague Rasmus will walk you through a proposed application of these and tackle the question on how do you actually apply GRC to your models? How could this look in a proposed practical approach? Over to you, Rasmus.
Thank you very much, Björn. I hope you can hear me, everybody. So basically, where it really starts when it comes to the organization's need in terms of their model registration is really to start to look at what's going on an organizational basis. So the first, and that really starts with registering your models, making sure that you understand the projects that you have and the kind of models that you are registering. So really it starts with the model registration, and for each of these models you can then start to work with different areas, such as what kind of versions these models are, what kind of areas these are working in, and so on. And once you have done that, then you can start to look at the actual frameworks and regulation outside. Now, one of the ways to look at that is to say, well, let's look at it from a framework and from a legislation and compliance perspective. So, for example, we can look at the EU AI Act and say, well, we need to be compliant with the EU AI Act in a certain organization in a certain way, and that means that basically I want to grab this regulation and then I want to install it and apply it to a particular set of my models. And in some of the projects that I have. So the way that and you can say, well, then what is this framework? What is this regulation and compliance? Well, really, what it is that it is a set of controls and it is a set of assessments. And just to show you how these controls looks like, then let's take and assess or some compliance rules such as the FSA. So this particular set of controls consists of some accuracy checks, some IT compliance checks, some ensuring that the right stakeholders are being informed and identified, that the bias mitigation or bias detection has been done for this particular model, and so on. So basically, what you do is that you build up a catalog of different controls, and then you apply these controls to your individual models and your internal processes in the company. Now, on top of that, because this is sort of the automated way of doing it, and really what we want to do is that we also want to that there are certain processes in the technology that cannot be traced, and some of these might be the assessment. So basically, the assessments is a way to sort of manage the human side of things. So basically, being able to apply a framework consisting of certain questions combined with certain controls. And once you can take these questions and these controls, then you can combine them into a sort of compliance system. And what really happens here is that you can then say, well, how am I looking right now in terms of compliance? And then I can do a particular scan and I can see how I'm doing right now and what I need to do in my particular model for my particular project in order to be compliant. So in this case, I can see that I haven't identified the stakeholders yet. I need to fill out some risk assessments, and also there's some explainability that I haven't done yet. So basically, I get a sort of a list of the things that I need to do in order to become compliant. And basically, you can say that in combination with these controls and these rules, I want to be able to fill out also a certain assessments in order to assess the risk, the overall risk across the particular model, and then I go through the assessment questions and I get some certain scorings. Now, from this point on, you can then say, well, if I'm above or below a certain score, or if certain controls are not registering accordingly, well, then I can actually make it so that the models cannot be deployed, so that the models cannot continue to the phase where they're actually being used in the business. So with that, I think I'll conclude my presentation and go over to the questions rounds. Thank you very much.
I will ask Rasmus and Björn to join me. First, Björn, if you can step in here also. We have received quite a few questions, but I think there's two that stands out that we will cover in this Q&A session. So the first one is really for you, Björn, I think, and that's more to reiterate a bit on the challenge or the change in these new AI machine learning models in the financial institutions, because do they not have a governance framework already for the existing models that are in place?
Well, of course, they have a couple of governance frameworks, which I would propose to obviously also reuse to some extent. I mean, it's not everything new with machine learning. However, there are a couple of elements to keep in mind, and one element that I think everyone can easily relate to is obviously that machine learning models are not necessarily very easy to explain. There are approaches to that, like Shapley values and other technical approaches, but that needs to be monitored. And in addition to that, machine learning models are not as static as what we have seen in the past when it comes to, for example, credit models. Machine learning models are adjusted every time they retrain, and they retrain a lot. So one needs to have a system that is continuously being able to monitor this and capture all the changes in the models, as well as reiterate on reassessment and so forth.
And welcome to you, Rasmus, also. And I think this other question is more targeted towards you. Mm-hmm. And that goes more in the direction of what we're seeing now in the financial industry, sort of also expanding the scope of the use of models in different parts of the financial organization. What do you see from other industries? Is this going to impact all industries? Is that what we're seeing from legislators? Or what is the situation?
Yeah, that's a very good question, Michael. So I think from my perspective, we're seeing this being sort of propelled in different industries, so not just in the financial sector, but also basically in all of the regulated sectors, so things like insurance, pension, but also in the public sector, where I would say that the bar of entry needs to be a bit higher maybe than the other companies or other industries. And I think also and then that really transposes into all of the different sectors and industries across, because they all need to comply to the EU AI Act and the other regulatory things that are coming out there now. And I think this is being also seen from the organizations now as a sort of an emerging thing that they need to look into.
Thank you very much. Another question we have now from the audience is more around the audit of an ML model, and what role does data play in that? And I think I will leave that to you initially, Björn.
Yeah, sure. Thank you, Michael. So, I mean, first of all, what we'll see, I mean, it depends obviously a bit on the application, but generally, when it comes to the data, usually I would suggest to start with the data. What we'll see auditors looking into is whether the data is biased, whether there is some sort of unbalancedness in the data, and then obviously looking into how is that actually overcome in the machine learning application. Have they applied certain statistical approaches to rebalance the data? And then when it comes to the model, obviously, how is the model working? Are there explainable features? Are there certain outliers? Has the model been documented according to the legislation? And so forth. So usually we'll see auditors also going through a couple of checklists, which are usually in line with what we proposed in our solution as being assessments. So that means that what the auditor is looking into and what is already documented should be a good fit, actually, together with the digital trace of it.
Thank you for that, Björn. And I think this also really highlights the necessity of not just looking at a isolated part of the process of developing or deploying. You have to go all the way back, as you say, to the data and what has happened there, who have worked with that. So I think the complexity here is also very much around the whole workflow for all the way from data to model to retraining of models and so on and so forth.
That was the meaning of the system, right?
Exactly. Good. With that, we will conclude today's session. Thank you all very much for participating. It's a pleasure to present you today. Thank you all.